Everybody, welcome to today's morning coffee with Mike. Today we are talking about how to get back into the market after you've been out for a long time. This question came in from the Trading Mind Wheel virtual conference. We're still getting through a lot of questions. There were more than 1,000 people that showed up to this conference. Couldn't possibly answer all of them, even though we were live for about 8 hours. And we're going through and answering some of these questions now. So here specifically is the question that came in. And for those of you that are watching live, I want to hear your thoughts about this. So type into the comments, let me know how you would handle or how you would answer this particular question. Question is, in a market that may have chopped you up from October 22 to the current day, how do you get past the dilemma of testing the waters again and possibly losing 10% over the next 6 months? I sat out until the end of October, but have been chopped up now and find it difficult to pull the trigger as it hasn't worked well over the past 6 months. Should I sit out and evaluate and get some mental health back, or should I keep testing the waters with my proven system until I finally gain traction? How would you guys go about answering that? Type into the chat, let me know. I'll share my thoughts with you while you guys are typing in your responses. So the first thing that I would do, where this person asked the question, should I sit out and evaluate and get some mental health back or keep testing the waters? That question tells me that they're concerned about mental health and are trying to figure out perhaps some thoughts, feelings, emotions, something with the emotionality, something with the psychology of trading. For that reason, I would say yes, go and do that part first. Oh, our our attitude, our it's really our attitude towards the market and how we approach it dramatically affects everything that we're going to do when it comes to trading. Even if you have a solid process that you've tested, your attitude can influence what it is that you're seeing. There's always going to be at least, even if you've programmed a bot, even if you programmed AI, there's going to be some bit of emotionality involved. There's going to be some bit of an art involved in the trading. Now, how can I possibly say that if you've gone out and you've coded this thing? Well, at the end of the day, it's still going to be you to trust this thing that you've programmed and to allow this system to go off it and do what it's going to do. So if you're not mentally right, then you could end up pulling the trigger on a system that would ultimately be working. And that's part of what I'm hearing in this person's question, that should they get some of their mental health back? Well, the answer is yes. Focus on your mental health first. Now, how do you go about getting your mental health? When it comes to trading, part of what we want to do is gain confidence in the system that we have. This person says that they have a proven system, but there's some piece of them that is still worried, is still worried about that potential drawdown. So if the system is proven, then you should also know how it operates, right? Yeah, you should also know how it operates. You should also know what the max drawdown could possibly be, what your absolute worst case scenario is. Let's say that you're starting out right now, and today is the absolute worst day for you to get started. What are the consequences of doing that? What's the consequences to the system? Do you know how to mitigate your risk? And do you know how to do that through trade management? Do you know how to do it through your position sizing? Do you have those answers? All those are important parts to any kind of a proven system. So many people, and I'm guilty of this too. When I first approached the market, well, what I would thought that trading was just you analyze the market, and if it moves up, then your analysis is correct. If it moves down, then your analysis is incorrect, unless if you, of course, bet that it would go down. A system is far more than just the analysis. A system has a lot to do with how you're managing risk and how you're position sizing as well. So you're able to if this person has sizing built into their strategy where even if they were to have a losing streak, that losing streak is not going to kill them, then okay, great. Then that's something that they could work and build upon. But part of me, well, when I hear the way that the question was phrased, should I sit out and evaluate and get some mental health back, or keep testing the waters with my proven system until I finally gain traction? Part of it, uh, if you're going to have confidence, you need to understand what the absolute worst case is for your system. What's going to happen if you start off on that losing streak? If you have that part in place, then the next step would be to then start going back and testing. Now, how do you test the waters when you've been sitting out for a particularly long time? I'll share the way that I like to do it. The way that I like to do it is by uh, putting on test trades. That's part of it. But I'm not just putting on any test trade. It's having clearly defined setups and understanding what an A-level quality setup is to you. So you'll have some setups are that have a certain shape, a certain pattern, a certain depth. But what's the bare minimum criteria that you have for whatever your setup is? And what would make that particular setup an A plus level setup? Well, what would make that setup go from good to great? And what would take it from great to outstanding? If you have all that in place and you start to find some trades like that, then yes, you should be putting those trades on. If you put those trades on, you should also know how much you should be risking on those trades so that way you don't blow yourself up. Part of how you're going to gauge market health, or what I like to call market mood, is it can be by how well the test trades that you put on perform. Another way to gauge it is by seeing what's the what's the breadth of the setups that you're seeing. So are you seeing a lot of setups? Are you seeing a lot of high quality setups? Think of it like if you're going to go to the store. You walk into the store and let's say it looks like a tornado hit it, then it's not a great time to go shopping in that store, right? The market is a similar way. If you walk into the market and you find loads of setups that are all high quality, then guess what? It's a great time for you to be testing the waters. If you go to the market, you look for your setups and you don't find any, or you only find garbage, then it's not a great time to buy. That's one way to think of it. Another way to think of it too is by looking at the overall landscape. The way that I like to judge the overall landscape is by analyzing the major indexes and by analyzing the major stock indexes across time frames. So I'm looking at the S&P 500, Nasdaq, Russell 2000, New York Stock Exchange, and the Dow. I'm looking at them on monthly, weekly, and daily time frames. And by doing that, I'm seeing which way the trends are moving on the long term, intermediate term, and short term. And when they're all moving in the same direction, that's where the most powerful trends happen. When they're jumbled, when you have long term moving sideways, maybe the intermediate term is going down and the short term is going up, that's where you have very choppy waters. It helps to give us perspective on what to expect when we get involved in trading. So there's all these different things that you can start to track and understand. Well, what type of environment am I getting myself back into? But to this person's first question, should I sit out and evaluate and get some mental health back? Yeah, mental health is the most important thing. Once you do have that mental health back, then it's time to start evaluating your system and seeing how robust it is. Well, what holes you can start to fill, and doing some of the other things that we already mentioned here. If you need a blueprint, the my new book, The Trading Mind Wheel, gives you that blueprint. It walks you through all the core skills that are needed for trading, what we discussed here already, as well as several other ones. And it helps to provide exercises and all the mindsets that are involved with every different skill that's essential for trading. So let's see what some of the comments were here. I saw a lot of comments popping in on Instagram. Well, let's see here. It looks like there's a question in here too. Someone asking a question about prop firms. Uh, Good with my own capital, but failing twice with the prop firm's money. Uh, that's interesting. I would be curious what size you were dealing with when you're trading your own money versus the prop firms. That a common uh, thing that happens is that let's say that you're trading a certain size and you're used to trading a certain size, and then all of a sudden you have a lot more capital at your disposal that can freak some people out. Um, I find it helpful to think in terms of percentages rather than dollars. So I'll trade the same way with 10 grand than I will with 100 grand than I will with a million. And it's because I've trained myself to think in terms of percentages, not in terms of dollars. Uh, let's see here. A couple of follow-up questions that this person had. Ashar, I had my own capital less than 500, and mm, trading challenge or the prop firm challenge is 100K. Yeah, so that might be it. So if you haven't started thinking in terms of percentages yet, I would attempt that. Start to make that a habit with your 500 versus the 100K, right? Especially if you have a small account. The temptation is to try to grow that small account very quickly. And so, yeah, it's only 500. Let me go all in on this trade. Uh, Jesse Livermore did the same thing. I'm listening to Reminiscences of a Stock Operator. If you haven't listened to that book or if you haven't read that book, it's a classic. Jesse Livermore's story, written by Edwin Lefebvre, if I'm pronouncing that correctly. Fantastic read, fantastic listen. One of the things that he did when he was starting out, he would go and plunge in with the small amount, but he would be so critical on the trade that he would take because he knew that if I'm going all in, I can't afford to lose. So he would make sure that it's not just an A level trade, that it's an A plus 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 level trade, and go for that and keep the risk extraordinarily small because he's still open that, yeah, this might be a loss. If you're jumping straight up to that higher capital, your tactic needs to change a little bit, right? If you're still going all in with that 100K, well, that's a lot different than going in with a $500 account. Uh, Position sizing matters. Position sizing matters quite a bit. So you need to figure out how much you're comfortable risking. Book goes into position sizing and risk management as well. So grab a copy. Let's see. Well, what else? What other questions have come in? Scrolling through here on Instagram. Yeah, you guys over there on Facebook, LinkedIn, Twitter, YouTube, get your questions in. Okay, coming from DJ, take a break from live trading and test the waters on a demo account. Yeah, that's solid advice. So that goes back to the conversation that we started with. Well, what advice would you give to the person that's saying that they're having some emotional problems with trading, that they've been chopped up over the last several months and they're thinking about getting back in? Well, what should they do? Starting with a demo account might be a good solution for them, right? So they start with their process, and they see trades, and they could start to track their trades and start to get in that way. Another great thing for them to do would be to start out with a small amount of capital, uh, not their full account. So starting out with a small amount of capital would be whatever amount is large enough for you to care about, but not going to kill you if you end up losing that as well. Rizzo says, before anything, find out why you lost money in the first place. Yeah, that would be fantastic as well. For for that person, um, and really for all of us, to answer why we lost money in the first place is a heck of a lot easier if we're keeping great journals. Journaling, I feel, is one of the 8 essential skills that are needed for trading mastery, and the reason why is for this very reason. It's very hard for us to figure out, oh, where we went wrong if we're not keeping great data. And a lot of people tend to think of journaling as like, oh, I'm just writing out my thoughts and feelings and emotions. Yes, that's part of it, but there's so much more. You want to be actively tracking your stats. You want to be actively tracking your trading plans throughout, from the moment that you enter, to the moment that you exit. How did your thinking evolve as the trade progressed? And it's from there that you can start to see how you manage a trade, why you managed it in the way that you managed it, and is this serving you towards your end goal? Are you following your rules? Once you have your journal in place, and I like to keep my journal in a spreadsheet. I use a Google sheet that I share with our elite members. What I'll do is I'll start crunching data from that. So I'll start to know, well, what's my average win? What's the size of my average winner? What's the size of my average loser? What kind of a streak am I on? Uh, what's the average high watermark of the trades that I'm in? And then try to extend that. That's something that gives me a great gauge on the market. Most recently, I'd say over the past month, uh, I've been on a winning streak, and my average high watermark has started to go up. So that's something that tells me, hey, I can start to push it a little bit more. Not a whole lot more, because the market is still in a fairly selective, right? I was going to say choppy, but it's more a selective environment. Trades are working, but not every single trade is working. We need to be selective, and seeing trades continue to push higher tells me that I should be giving them a little bit more room. And so that's a slight tweak, a slight adjustment, not just going all in, pressing the pedal to the metal. Our own results can give us a lot of great insights into how we should operate. Yeah, Rizzo, you have a lot of great comments. Backtest your strategies before putting real money on the table. Yes, absolutely. And that's true too, whether you are making up a strategy from scratch, whether you are reading somebody else's work and going and applying it. And it's necessary in both cases, and I would suggest. And if you saw the Trading Mind Wheel virtual conference, we did a whole 8-hour virtual conference, and one of the things that we spoke about was this idea of backtesting. Akil and I were talking back and forth. Akil Stokes. Akil is a great guy too. If you're not already following Akil Stokes, I believe he's at Akil Stokes RTM on Instagram and Twitter and a couple of other places, but definitely check out Akil. We were both of the mindset that we enjoy manual back testing. Like, give us a stone tablet and a chisel, and that's what we're going to be happy with. But in all seriousness, like going back and manually back testing, so that way you could live through the trades and see what the price action was like, gives you a much better feel of when you would go and try to trade this thing in real time. If you find somebody else's strategy, and for me, the strategy that I found was William O'Neill. Then I read about Mark Minervini and Nicholas Darvis, Jesse Livermore. All of those guys, they all traded in a fairly similar way. I was able to see the charts that they posted, go back in time and go bar by bar to see what it was like to trade those trades, and that can give great insight. That's the type of back testing that I would recommend that you do. That'll give you a great feel, and then when you do start to trade with actual money, yeah, start small and then gradually increase your size. If you're doing a funding challenge and you're starting with like you're going from your personal account, which is at $500 or $1,000 or even $10,000, and then all of a sudden you're given 100 grand, yeah, that could create a little bit of anxiety. Think in percentages, start out small, and then start to scale up. Yeah, great stuff, Rizzo. A lot of great comments from you. Reset your mind and don't be attached to the money. Get into a routine. Routines are very good. We want to, as far as routines go, I would, routines are great, or routines can be great. We want to we want to evaluate our routines, just like our trading, just like everything else. Uh, I think that it's good to do a monthly and a quarterly review of what our routines are. Sometimes you can feel like you're in a rut. Sometimes you might want to change things up. And that's okay. We want to do so consciously. Some routines, like a new routine for me, is this show. Right? The show, the morning coffee with Mike show is about a month and a half, maybe 2 months old, but that's part of my Monday through Friday routine now, right? So even something as simple as that is seeing like, well, how does this, how is this serving me? What am I sacrificing to do this? Um, we want to be intentional with everything that it is that we do. Any other questions? Or a couple of minutes over, but if we have another question or two that comes in, glad to take it. Here's a random question. What do I think about affiliate marketing? I think that affiliate marketing is great. I think that if you are if you're starting a business, affiliate marketing can give you an additional source of revenue. When I'm doing any kind of affiliate marketing, the way that I do it would be that I would want to test any kind of product first and to actually believe in that product. And the best affiliate marketers actually have tested the product, believe in the product, and are willing to put their name behind it. If you don't do that, then you might end up in a situation like well with FTX where that blew up on a lot of different celebrities, and you don't want to be caught in any kind of a situation like that where you haven't done your own due diligence into the thing that you're recommending. There's real people on the other side of whatever it is that you're selling. Think about those people. Uh, have empathy. Would you give this product or this service, would you recommend it to a close friend or relative, somebody that you actually care about? If the answer is no, then why would you recommend it to anyone else? And hopefully you're a good enough person where hey, you wouldn't want to give your friend or relative a piece of trash. Believe in whatever it is that you are selling, whether it's yours or whether it's somebody else's. Let's see. Anything else? No, I think that's the last question. All right, so we'll wrap it up there. Great seeing you guys as always. Great questions, great comments too. Rizzo, thank you so much for all the feedback that you put into the Instagram stories. I'd love to hear from more of you over on Facebook, LinkedIn, YouTube, Twitter. Type into the chat room as well. And if you haven't already grabbed a copy, go grab a copy of the Trading Mind Wheel. It's on Amazon, Barnes and Noble, basically everywhere books are sold. And I'll see you guys back here again tomorrow, 9:30 a.m. Eastern, for the next morning coffee with Mike. Take care. Much love. Peace out, everybody.